Ed, it's good to see you today.
Hi, Contessa. Good to see you again.
All right. So congratulations on being added now to the S&P 500. I'm just curious what this does for your company in terms of exposure. What does it do in terms of access to capital? And what do you do with it?
Yeah, it's really the latest chapter, Contessa, in what's been the institutionalization story that Vici represents just over 4 years since our IPO. We've grown markedly during that period. Our market cap when I first started was $4 billion. Today it's over 30. We had a couple dozen properties. We're up to 43. We owned only one property on the Las Vegas Strip. Today we own 10. We got elevated to investment grade in late April in conjunction with our MGP closing. And this S&P 500 inclusion is yet one more step in that institutionalization, giving us even greater access to capital and a greater opportunity to capitalize on growth opportunities in experiential real estate.
MGP was one of your biggest competitors, MGM Growth Properties, that included a lot of MGM land underneath their casino, so not the operations. I'm curious, because you have so much exposure, you're the biggest, I think, hotel and conference owner in the nation and the largest landowner on the Las Vegas Strip. How much are you reliant on consumer spending? I mean, do rising gas prices concern you, or the rent is due, your tenants are going to pay it, and that's that?
Yeah, so we do operate off of rent. We do not operate off of operator revenue. And I should point out, for the benefit of your audience, Contessa, that we collected 100% of our rent entirely during COVID, which speaks to the resilience of our operators. Our operators are, I believe, the best leisure, hospitality, entertainment operators in the world. When it comes to our exposure to the Strip, with the 10 assets we have there, icons like the Venetian, Caesars Palace, MGM Grand, Mandalay Bay, we have exposure right now to what we firmly believe is incontestably is the busiest place on earth. But more importantly, for long-term secular trends, the Las Vegas Strip has been, it is, and it will be for decades to come, the most economically productive street in America, in the world, in fact, because of our operators' ability to constantly reinvent and refresh the experience and keep the consumer coming.
So let me understand, Ed, it's good to see you, by the way, your business a little more thoroughly. You own the land, which is critical. You own the buildings, which is critical, but you operate none of it.
That is absolutely right, Tyler, and it's good to see you after so many years. We do not operate any of it. Our operators own the operating risk. They own the downside, but they also, very importantly, own the upside, the entirety of the upside, which we are very happy for them to have. They've worked very hard through COVID, and now they are thriving in a wonderful way that they deserve.
What's the most valuable part? Is it owning the land or owning the buildings? I'm always curious.
In this case, it's both, Tyler. Owning land, obviously, along the Las Vegas Strip is to own very valuable land. But look at the Venetian, our biggest property of all, 7,100 hotel rooms, biggest private sector conference, convention, trade show space in America, one of the biggest commercial real estate assets in America, all told, 13 million square feet. The value of the building is really almost incalculable given the economics that take place within it. That asset did $1.8 billion in revenue alone in 2019, pre-COVID.
Shepard Smith here. Thanks for watching CNBC on YouTube.